Hello, traders. Gary Wagner here. Approximately 11:07 in Honolulu, 5:07 in New York on Monday, 17th day of October 2022, and this is the daily report for gold and silver. Gold is absolutely lower than the close in New York, which was about $10 higher on the day. Currently, we have the December contract of gold futures up $6.60, 0.4%, and fixed at $1,655.50. However, today's gains in gold were not due to market participants. They were actually active sellers in the market, but rather dollar weakness that took the dollar down by 1.02%, with the dollar index currently fixed at 112.045. Silver had a strong gain today of almost 3%, 2.93%, or 53 cents. Basis the most active December contract, we currently have silver at $18.60. No doubt, market participants were active sellers in the market today, even though gold had a modest gain. That gain was the direct result of extreme dollar weakness, with the dollar being down just over a full percentage point. We're looking at a daily chart of gold futures. It is an inverted hammer in terms of the candlestick that we can identify from today. After a defined downtrend, you do have an inside trading day when we look at it through the eyes of a Western bar chart. However, it could also be interpreted as a bullish harami, which is a key reversal pattern for gold. However, gold is in a scenario right now where I believe there is still pressure that could be seen to the downside. And of all of the key reversals, such as an engulfing bullish or a piercing line, the bullish harami is the weakest of the two-day candlestick patterns, indicating a bullish reversal potential. After gold struggled about a week and a half ago with the 50-day moving average, which is at $1,721, we had a clear, defined, and methodical sell-off to these recent lows. However, when we look at the low that came in at the end of September at about $1,621, it is likely that major support resides at about 1,620. In terms of current resistance for gold futures, we absolutely need to see gold break above the 23.6% fib retracement. That occurs at $1,670. $1,680 would be the next level above that. And of course, the gold ring, so to speak, would have to be gold breaking above $1,700 per ounce. But honestly, gold is struggling just to maintain its price point without going lower. Although it was dollar weakness that was supportive of gold today, what is working against it is the rising yields on both the 30-year bonds as well as the 10-year notes. If you recall from Friday's show, the yield curve between the 10-year notes and 30-year bonds were actually inverted, with a higher yield being granted to the short-term 10-year note. That kind of neutralized today. You currently have the 30 years at 4.015%, and when we go and look at the 10-year note, that is also at 4.015. So they are absolutely neutral, with the 10 and the 30-year U.S. debt instruments yielding the same interest rate return for investors. Lastly, I do want to take a look at silver. We're looking at a longer-term weekly chart with a fib retracement that begins in March of 2020, when silver was trading at that extreme low of about $11.70, up to the most recent high, which comes in just above $30. The multi-year correction in silver has absolutely taken its toll on pricing, going from $30 and then recently, over the last couple of months, challenging and breaking below the 61.8% fib retracement. That comes in at approximately 1880. We broke below that recently again. Last week, we had a tremendous decline from about $20 at its high to break below 19. It is currently at 1860 and really, on a technical basis, has resistance at 1880. We need to see silver effectively close back above that, and then our target would be $21 per ounce, but it has to trade back above 1880 for that to occur. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.